Okay, thank you everyone for joining us this afternoon. I'm Brent Hoberman, co-founder and chairman of Founders Forum. For those of you that don't know anything about Founders Forum is a global community of the top tech founders, corporate CEOs, and world-class investors. While our community can't gather in person, we are doing a content series called FF Live. I am now pleased to hand you over to Murray Roos for today's session. Murray is Group Director Capital Markets of the London Stock Exchange Group and a member of LSEG's Executive Committee. Prior to joining LSEG in April this year, Murray held roles at Citibank and spent a decade at Deutsche Bank holding a number of senior roles, including EMEA, Head of Equities and Head of Emerging Market Equities. Murray, over to you.
Thank you, Brent, and good afternoon, everybody. We've got a fantastic panel today that really does need little introduction. I'm delighted to be joined by Liautaud from Balderton, Penny Gustaffsson from Darktrace, and then Moulding, founder and CEO of LSE-listed e-commerce platform THG. How are you all doing this afternoon, everyone?
Great, thank you.
Good. Fantastic. Well, we've got a big audience today and a lot of ground to cover. So let's get started. Just thinking, American technology businesses have been able to really achieve tremendous amounts of scale. If we just look at a company like Apple, whose value is comparable to the whole of the FTSE 100, or Nvidia or Intel, which are almost 10 times and 6 times the size of our largest tech company, ARM. I'd say, just framing it like that, perhaps my first question to Bernard, if you will, why do you think we haven't seen this type of scale replicated in Europe yet?
Hi, Murray. I mean, it's great to be with you on this panel. Well, I actually think it's a bigger issue than just not having several mega tech companies. I would say that we Europeans as a whole in the past have not understood the real importance of tech and early enough and largely enough. If you look at the market cap of the US tech sectors, this past summer, it exceeded the whole of Europe, including the UK. And it's been a huge change. As a reference, in 2007, Europe was about 4 times the size of US tech stocks. And I think we have in the past missed several waves. We missed a software wave. If you look at the top 30 companies in the world right now in software, 26 are American, 4 are Europeans. We missed the internet wave, only 1 company in the top 30 right now. So it's quite a big thing. And it's surprising because if you think about it, some of the most brilliant minds in technology are Europeans. We have scores of fantastic engineers. We have a lot of incredible startup founders. And I think in the past, we've always reflected on the fragmentation of the European market, the fact that founders have often stopped short, maybe sold too early, and the fact that our tech companies have been undercapitalized. I think the thing though, is that we need to look forward. If you think about the composition of the global tech giants today, I mean, it reflects the past, right? Apple was created in 76, Microsoft, I think, was created in 75, and so on. So what's important is to think about what we should do now, right? So that we don't have the same panel 20 years from now. And the good news is that we have now a much better set of conditions in Europe than a while ago. Like the governments get it. There are plenty of city hubs. We have lots of new companies. We have great success stories globally, like Spotify, Adyen, the Hut Group, Darktrace. And to me, there's a couple of things that are important. One is that we have more and more founders, which I think is fantastic. And out of that, what we're starting to see, and we'd like to see more, is obviously what we could call the true captains of industry, meaning folks who have a true planetary vision, who wants to build $100 billion giants, who want to sell their products to billions of people. But it's really a life mission, right? Building a tech giant is not a 5-year adventure. It's a 50-year endeavor. You know, if you think about the life of Steve Jobs and Bill Gates, it was their company first. On the investment side, though, I'd say we need a lot more. Our European companies continue to be much, much less capitalized than their US counterparts. Our European venture industry is a quarter of the US. And I think investors in general need to see technology as an absolute key component of their asset allocation. I mean, it should be in the future, and now actually should be 25, 35%, not less than 5% like in many European asset managers. So I think we have a lot to do, but the great news that it has started to happen and the momentum is clearly building.
Thanks, Bernard. You know, just picking up on your point about the allocation from asset managers, perhaps just a question for all the panelists. In terms of the asset allocation by those asset managers, do you think it is potentially that European investors are too risk averse? Perhaps Poppy.
Yeah, hello. I think, in short, I don't think so. No, I think that is an excuse. So by means of reference, I'm the CEO here at Darktrace, and we're one of Europe's fastest growing technology companies. And we're using artificial intelligence, just for context, to help solve real world problems at scale. And we're very used to thinking about AI, and we look at those big tech giants such as Apple, Google, and Facebook that have grown some of the largest businesses in the world off the back of AI, but it's very much in the consumer space. And here at Darktrace, we believe we're one of the first companies to really help sort of enterprises adopt AI at scale. And the reason that we were able to do that is because of the scale and magnitude of the ambition that we've received from our investors since our inception. And our investors, many of whom have been European based, have first of all identified the fundamental technology that we have, but also backed our ambitions to become these sort of multi-billion-pound businesses that, you know, this panel represents. We have here represented on this panel a lot of people that really demonstrate that there is no lack of desire. We're not too risk averse as a nation. Our investor base isn't necessarily too risk averse. But personally, yeah, I do feel frustrated that we're not seeing the Googles of the world coming out of the UK, and the fact that the likes of DeepMind and these other great sort of technology potentials sell out to sort of these big US based companies. And I'd love to see the UK becoming a real sort of benchmark for these sort of technology hubs, technology sort of innovations. I think having Matt on the panel and everything he's doing in the Hot Group is great, a way of sort of really helping inspire and create the aspiration and the motivation and the momentum. And I think if we get this right, we'll create that sort of virtuous circle as more and more people sort of raise that bar of aspiration.
Super, thank you. Perhaps Matt, going over to yourself. You know, firstly, congratulations on your recent IPO. You have built at the Hut Group a phenomenal business over the last 8 years, over $1 billion of revenue and over 100 million of EBIT. What advice in terms of scaling? What advice would you give young entrepreneurs looking to scale up their businesses?
Wow, could spend a long time just talking about that, I guess. I think one of the biggest challenges that I always found through scaling was actually managing the balance sheet, because, you know, a lot of people. So we chose to use actually quite a bit of debt alongside. So we've got Bernard here who kindly backed us very early on and put some investment in the business, and that was our first professional investment, and that was key to us. But then thereafterwards, we actually didn't bring on anything like the level of capital, and so we did run undercapitalized in many ways, using debt where at all possible. So that constant stress was a big thing for me. What I would say that I do come across, which I really struggle with personally, is a lot of people running their own businesses get obsessed with the valuation. And it depends what you really drives you. I think if you become obsessed with the valuation, you sell out too soon. Whereas if you obsess over the long term, then you'll pick partners for investors who then stick with you. And yes, you might take too much dilution early on, but you know what you will end up doing there would be you can continue to raise capital, and you base yourself on partnerships rather than getting the best valuation today. And I do believe you can end up with the wrong share register quite quickly if you focus on just choosing your investors based on who's paying the most. So balance sheet was always a challenge for me as I was growing and taking on more debt along the way. We've obviously cleared that away through the IPO. And I found that stressful. But at least what I knew when I had that debt on is that I had the right partners with me. I would hate to have debt and then have a share register that I didn't have faith in. That would be a very stressful place to be. And so that obsession for a lot of people in building a share register based on who pays the highest valuation, just for me personally, I wouldn't choose that path. And I think if you're long term, you'll end up with a stronger business and a longer journey if you do it based on partnership.
Very interesting. Talking of investing, perhaps one for Bernard. Looking at your portfolio, Bernard, you've had a lot of success backing European companies which have gone on to scale globally and achieve global success. Presumably, as you look at these companies, you must see that sub-businesses are a little bit more scalable than others. Is there a sort of a magic formula? Is there a playbook in terms of when is, for example, when is the right time to expand? When is the right time to scale beyond your home turf?
Well, it obviously depends on the circumstances and the kind of company. In general, I advocate the companies to go outside of the home turf quite quickly. If I take as an example a company I started a long time ago now, Business Objects, I started in Paris, but 1 year later I already had an office in Menlo Park in California and one in London, and starting so quickly abroad enabled us to confront ourselves to a much broader competition than early on, and what we could have found in France, which was to some degree a protected market, or certainly a market that was way behind what was in the US or in the UK. So I would certainly push the companies. That's what I do with the companies in the portfolio, to go expand as rapidly as they can. And it depends, obviously, again, the type of businesses. But if you're a software company, for instance, a tech software company, you know that the market is going to be in the US. So I would argue, well, go to the US quite early. Go there actually as your second market, because and don't try to go just Europe only for 5 years, going like from the UK to Germany to France to Southern Europe, because it's going to take you forever. All these countries are different. To some degree, they're small. And still, in the meantime, you're still not addressing your biggest market where most of your competitors are. Now, obviously, in other areas, it may be different. You can create a fantastic pan-European business. But I mean, if you look at the two companies that we have on the panel today, who are recognized global leaders and who have a chance to build, multi-billion, and in the case of, in the case of these two, like really big giants, they're both very global. And I think that's an essential part of the development of a business.
And perhaps just building on that theme about scaling globally, perhaps a question for Poppy. Do you think that there are certain countries that are easier to scale in than other countries? Obviously, the big countries like the US and regions like Asia are very popular. But how do you feel about some of the other countries?
I mean, I can talk to our experience of being a business that was founded and grown in the UK. And first and foremost, it was a brilliant place to do business because, one, we could tap into some of the best mathematicians in the world, and we have a very strong scientific base here in the UK, as well as a history, of course, steeped in cyber from things like Bletchley Park and GCHQ and all of that good stuff there. But what it forces you to do, to Bernard's point earlier, is that you become very good at trading internationally very early on. So recognizing some of the themes that Bernard was touching on there, again, about your ability to sort of trade internationally and doing so very, very early on. We were founded in 2013 and we had our first sales team was based in Europe, but we developed that over in the US within 9 months of founding the business. So then very, very quickly you have to learn to innovate your business model to cope with different geographies. And then you can go into other different markets and you can go into Asia and you've learned those skills. So being founded in a country, in an island nation, if you like, that you're forced to sort of trade internationally fairly early on is a very, very good skill that you carry on with you when you then go on for that global expansion. And now we're a business that's got 44 offices all over the world. So you can see that sort of really paid off. But our ability to sort of adapt and flex and innovate, I think that has come from the requirement to trade internationally very early on. So I think what I'm saying is that any of these nations where you are encouraged to sort of trade internationally early on in your cycle really does sort of pay benefits further down in your scaling journey.
Thank you. Thank you. You know, obviously, as we think about scaling and as businesses are growing globally, one of the things that a lot of people obviously do is think a lot about acquisitions. You know, Matt, perhaps a question to you is how important do you think acquisitions are to building big businesses? What do you think about the risks associated with them, etc.? I mean, perhaps you can start with you and then go over to the other panelists, since you know you've obviously managed to acquire and integrate a number of companies along your journey.
Sure. I think it obviously depends what sectors you're in. I mean, the fundamental with our business is, you know, we are a technology platform that takes brands direct to consumers. So as a result, we have been able, when you build your own technology, you have been able to make acquisitions and then scale them up. Now, the reason we do them is to start something yourself. When you've built all the technology, you've done all of those things, you've built all that infrastructure, to then do the next step of buying brands or building them from zero. There's an awful lot of energy goes into getting these things out of the ground, making the identity, so on and so forth. And people can spend 5 or 10 years building a brand in any given business, you know, whether it's a reseller like Look Fantastic, or if it's a brand, you know, such as My Protein or S-Bar and the likes, even Perricone. So what I prefer to do is to say, look, I will pay you a premium. I will pay you your goodwill for building that brand. You've taken that brand from X to Z. We now want to restart and then really scale it up. And that's got, you know, there's real merits for us. We're saving 5 years, 10 years. Let's say someone has put 10 years into it and we could have done it in 3 or 4 years. That is still 3 or 4 years. I would rather pay the goodwill, get going, and then passionately go and scale that up considerably. And we've seen that in most areas. You know, in beauty, when we bought Look Fantastic, you know, that business has gone, you know, probably grown 30-fold plus in the 9.5 years, so 10 years almost soon that will have had it. Similar sort of ratio with My Protein. You know, these are small businesses, but great brands. And so it's just, you know, we would rather pay the goodwill once you've got belief and faith in what you're doing and save that time and then back ourselves to take it to the next level.
Super.
Yeah, I would add to that, Murray. I mean, I think acquisitions is an important skill set that any growing and scaling company need to acquire over time. It's really important. And if you look at the big tech companies right now, they exercise that muscle all the time. They do dozens and dozens of acquisition every year. And for companies to grow and to become really big, they need to expand. They need to expand their product line. And so you have to have the ability to basically choose between building the product internally, which obviously has a lot of advantage because you control it fully, it's already integrated and so on, or acquiring from the outside and getting a faster time to market, getting potentially the best product out there. So you have to be able to do it, or at least to be able to make that choice. And I think, the good companies are doing that very successfully.
Excellent. You know, perhaps perhaps just sticking with you for a second, Bernard. You know, we talk about growing these businesses quickly and scaling quickly. You know, you mentioned a little bit earlier about your experience with business objects. How do you think about checks and balances and controls as you grow a business very quickly in this environment?
But what do you mean exactly by controls? I just want to make sure I understand your question properly.
In terms of growing a business and scaling it very quickly in a responsible fashion.
Oh, okay. Yeah, I mean, I think first of all, I mean, it's important. I mean, you grow the business very quickly, but you do it in a planned manner, and you do it with an underlying set of principles. And these principles, these values, they need to never be compromised. So integrity obviously needs to be one. The quality of your business, your revenue recognition, and so on and so forth. I mean, these principles you set in stone, and again, you never violate them. In order to make that happen, of course, you need to have several things. I mean, you need to have a great team around you who is able to manage all this, and in that team, you need to have the check and balances as you define it. You build it partly in the team, in the sense that everybody's aligned, everybody's going in the same direction, but you have to have people. Like you have to have a strong CFO who makes sure that you know, as you go along and you push through, because you have to push aggressively towards reaching these aggressive goals, then you don't compromise the principles, right? And that's really important. So quite often when you look at what's gone wrong, is that you know, there's been so much pressure put on the business and maybe on the sales side of the business that people make the wrong decisions. If that happens, if the principles are not enforced in a strict manner. And then the other point is to have obviously a good board, and a board that you know, applies good governance, but at the same time is of great support of the company and what it's trying to achieve. So I think it's perfectly doable. If we follow these simple principles, in my view.
Thank you. Perfect. Just thinking, you know, perhaps a question I'd love to hear everyone's view on this, given how important it's becoming and how much people, investors, are speaking about it. But a number of themes have emerged over the last 9 months to a year. They're probably accelerated somewhat given the pandemic situation we're in as well. But you know, two that I'd like to bring out are ESG and also diversity. How important are these objectives in your businesses, and how complementary do you think that they can be to really scaling the business? Poppy, do you want to perhaps start with that?
Shall I take that one first? Yeah. So from a CEO's perspective, my priority is running a business that's focused on growth and optimizing shareholder value. And that is what the job is. But what makes us successful as a business, especially here at Darktrace, is great mathematicians and well-educated, well-rounded individuals that have a wide range of different perspectives and can all approach a challenge with a different view. And as a consequence, at Darktrace, we've got a workforce that is made up of 40% women, which in technology is something that's quite rare. And I reflect on that with hindsight, on something with pride. That being said, the driver was more than diversity. It was about sort of being able to tap into the talent wherever it presents itself. I was frustrated with that constant challenge of, you know, you can't recruit women into tech because there's not enough girls going into STEM, and I couldn't accept that as an excuse because I wanted to be able to tap into this brilliant workforce because I knew how clever and capable they were. So given that we sort of tend to be quite good at doing things a bit differently, we just brought in a whole bunch of graduates from a different range of sort of non-technical backgrounds and equipped them with the technical skills that they needed to do to be able to do their job. And of course, they're brilliant. They see the challenge very differently. And that's how you get these really innovative approaches to problems. But looking forward, I have to also think about how we're building the foundations for my growth over the next 5 years, for the next few decades, how we're sort of supporting other sort of tech innovation. And that means sort of feeding back into the systems and structures that sort of help support the diversity and that encourages innovation to flourish. And that's why a lot of sort of initiatives that do exist, such as we're doing things with WISE and NCSC and things like that to help support diversity is an important aspect. So I guess what I'm saying is that there isn't a conflict. My single focus is about growing a business that is as successful as it possibly can be. And I completely see that being aligned with the goal of making more diverse and socially responsible organizations. And I don't think that there is any discord between the two. They are sort of one and the same for me, in my views.
Thank you. Thank you indeed. Matt, ESG, obviously a very, very important theme as well that's been proliferating. How do you think about that? And how do you think about that complementarity to building businesses?
I mean, look, with any challenge, there's huge opportunity. So we're trying to grasp it as an opportunity. As an example, our technology platform, Ingenuity, is carbon neutral. So we've worked hard, make sure it's carbon neutral. The whole group is carbon neutral now. And the great thing about that is, you know, when we're selling our technology and licensing it out, then typically we're working with brand owners who really need to sort out their carbon footprint, and they're looking for these qualities. And it will help to stand you apart in winning business with them. But at the same time, in our other areas where we have brands and we're selling direct to consumers, being able to differentiate there. So we've got a nutrition brand called My Vegan, one of the organic ones that we launched, and that's the world's first plastic neutral brand. Now, as a result of that, that's just a great position to be able to give. You know, that will stand you apart from other brands. And then you know, in the wider world of finance and shareholders, more and more money is going into specific ESG related funds. So if you don't address ESG, the number of shareholders you can deal with is dwindling fast. Whereas if you do address ESG, there actually aren't enough people to be able to meet the capital pools that are there. So on the one hand, you can please your customers, you can gain a competitive edge on many levels, whether that's with a corporate or whether that's with the consumer in any country of the world. But then the big prize on top of that is actually there's huge capital to be deployed to ESG friendly businesses, ones that are really taking this at the forefront. And so what you'll see with TSG is we're actually going to be even moving into the not only tech solutions around recycling and you know, repurposing of materials, but actually we'll even be involved in the crunching of it and the regeneration of it. And so, you know, addressing that point of ESG, I think, wins on every level. So it's just a huge opportunity. You can ignore it and you may well be fine, and that's great if it works for you. But there is a massive opportunity across every area, and you will access more capital for sure. Right now, there's just so much capital pointing at ESG.
Yeah, to add on to that, Murray, I mean, as an investor, ESG is becoming also a lot more important. I mean, we have, to some degree, we are in an interesting position because we have obviously us as our own firm and to observe ESG initiatives and policies there, but also we are investors in about 100 companies, active companies right now, and obviously we can have these kind of debates and learn from the company, but also nudge some of the companies into applying some great ESG initiatives. And then as well, we're making investment decisions every day, and we're investing. We're making ESG as part of our investment principle right now. So as an example, we're a signatory of the UN Principles of Responsible Investing, And that's something that we'll continue to do. And we've defined our 10 sustainable future goals in our different policies.
Indeed, and I think that theme will certainly continue to resonate. And certainly from the stock exchange perspective, we see a growing tide from investors and issuers alike around the importance of building ESG. What I'd like to do now, perhaps, is we've got a number of questions that are coming through for the panelists. What I'd like to do now is perhaps open it up to the audience and ask a number of questions. I think the first one will be from Ivan Mazur to all panelists. But Ivan.
Hi. There's a question maybe to Bernard and Poppy, because I'm Ivan Mazur. I run a enterprise SaaS business called Ametria. We're backed by Octopus Summit, a whole bunch of people. And the question picks up on what you were just saying earlier, Bernard, about US being market number 2 for most enterprise software businesses or any technology business because of the scale of the market. Given COVID, is there any reason that a technology or a software business today shouldn't just immediately start with the US being market number 1, even if they're headquartered here in the United Kingdom?
I'll take that one first, if I may, Ivan. I find the ability to be proximate to your customers, especially when you're launching a new product or innovation, is so important. To be able to pick up the phone to your customer and say, how's it going? Are you finding this? And to be able to respond really quickly is really important. And you will feed that back into your product very, very fast, especially for something like a SaaS. So yes, there is an advantage of those first few adopters of a new product set being relatively proximate to home. It's easier to have those conversations. You're on the same time zone. If you can make it work, having it work abroad, then perhaps it's less so. But I would firmly recommend that bringing it a bit closer to home, especially for those first product innovation, just because that proximity to your customer is such an important feedback loop.
Yeah, I mean, I would agree to that. I mean, especially if you work at the enterprise level, like obviously Poppy's business. I think in cases where you have a low touch, high velocity model, almost a self-service SaaS model, you can actually develop your business quite quickly globally because you don't have to have that high touch point. And that happens. We've seen that in a number of our portfolio companies. But I think if you have a sales cycle that need a lot of touch points, I think it's a good thing to start in your local market first. Then you can expand quickly in the US.
Thanks, Bernard. We got a question from Nick Flower for Matt.
Sorry. So look, Matt. First of all, congratulations on your highly successful IPO. It was fantastic and very encouraging to see for all sorts of reasons. But one of the main things that I observed from a distance was your use of the special share, right? Which is something that people have been toying with for some time. And, I think that the UK is, in the public markets at any rate, is terrible about just sort of staying down the beaten track and, if it ain't broke, don't fix it and just carrying on in a plain vanilla way. I think your IPO sort of went against that slightly. So this is not just a pure sort of fluff question other than say, well done. But I mean, what was the reception from the public markets of that? And I sort of, as a general sort of contention, I sort of feel that if the UK public markets can get better use to founders, using those types of governance, enhancements, let's call it, that it will become more attractive for a broader array of founders. But I'd be interested to get your take as to how you found institutional reaction to the sort of the special share.
I guess one of the things I've learned is what does public markets mean? There are a lot of parties involved in the public markets, way more than I first understood. I mean, to be clear, my IPO has been a lot more standard than maybe has been reported, and that probably gives you an idea of how it was received, I guess. The golden share that I have has one purpose and only one purpose alone, And what that is I can prevent a hostile takeover of the business. That's it. That's all it does. Now, you know, I want that, because when you go into a public market, you know, we've created 3,000 jobs already this year. And you know, I believe we're really onto something. So going from 7,000 to 10,000 is a big jump. We've got, you know, I've got 3 years for that golden share, and then it passes when that happens. So who knows, I might create another 10,000 over the next 3 years. So most of those are local in the UK, and I'm quite passionate about doing that. So that gives me the breathing room to prevent, you know, someone with a better rating than myself, say based in the US, coming over and using that rating to come and buy my business at a lower multiple. So I can get on and I can run the business. Now, in terms of how that was received, what I can say is investors were phenomenal, truly phenomenal. Fund managers, etc. They get it, right? I mean, most investors across the world are invested in all the big US tech, where you know, a golden share is 1% of the journey that you would take if you went on buying one of those shares. So they're very used to, you know, something that's slightly outside the norm. The LSE was superb. You know, very clear. If you want to be a premium listing, you can't have the golden share, but if you want it, you can have it. But it just means you won't be in the FTSE 100 per se, even though your market cap allows you ordinarily. And I was fine with that, so I took that. I guess though, you know, even the banks that you're working with, they would understand it to get it. But there has been, you know, just an awful lot of and I think part of it is my own fault. I haven't reported this as well as I should have done. And my advice to everybody is, I would really educate people about what it is is different about your IPO. And I didn't do the best job there, if I'm brutally honest, and I've paid the price for that. And so, you know, people think I've got some really unique, you know, ability, like a dual class voting structure or something like that. And there are companies in the UK listed on the stock market with dual class voting structures, and so you can have that. But I've not. And so my advice would be, you will receive an awful lot of attention and focus, and it won't be as well received as you would like if you don't take the time to properly educate people what it is. Because if people actually really got into the detail, and you know, people are busy, they've got an awful lot to report on, a lot to review, and so they won't necessarily have the time. It's for you to give them the detail, and that's probably the big advice I would give there on that, which is why it's probably been a livelier topic than it would remotely need to be, because who doesn't want to keep a British company British for at least 3 years?
I couldn't be more in agreement. I mean, I think we should really celebrate this IPO and the goals that Matt has put for this company, and everything that has been done in terms of governance has been with the objective of creating a massive business in the long run. So hats off to you, Matt.
We've got a question from Brent Hogeman.
Yeah, sorry, mine is a bit derivative now of Nick's. So it was really saying, you know, what else might we look to change to get more companies listing on UK exchanges? So there's the golden share issue for a premium listing, but there were lots of other things that are now being talked about. There is a review going on. There's liquidity. There is, how do we get, I guess the other thing, Matt, you spoke about sort of quality of analysts. So maybe it's changed, but I can say this, but in my day, the European analysts were way less good. I learned very little when I spoke to them. One of them thought my BlackBerry was a Game Boy because he'd never seen it up in Scotland. So he thought, why was the CEO playing on his Game Boy when I was working while my CFO was chatting away? But anyway, so I think it's, what would we like to see changed to get more European or specifically UK listings? I'm going to direct that to whoever wants to bite.
Let me make a start, and then I will sort of add to Matt and Bernard's comment on the specifics, having those ones been done before. Just to emphasize a point that we really do need to. I I'm running a business now at a scale where you're looking to bring in the experience of people that have grown it to that next level. And I look to the UK public markets to bring in, not even just to set the tone for aspiration, but to bring in the quality of people that have gone through this before. And there are very few people that have trodden on that path. And then it becomes a bit of a sort of self-fulfilling prophecy. It's the less experience that there is, the less that goes in there. And then it becomes increasingly attractive for businesses to IPO in foreign shores, such as in the US, where it's perceived that, you know, a listing in the US is far easier. You get much bigger valuations, there's less hurdles to jump through, so your free float can be much smaller. You can be a little bit more creative about the types of shares and things that are required there. And I think that therefore becomes where people want to go, and then you see more of them in the US, and then it becomes a little bit of a bubble of momentum that happens over there. And we do need to recreate that over here in the UK. I think Matt's done an excellent job of really sort of starting that, but we do need to build on it, not just to enable UK companies to list in the UK, but to benefit from the experience of people that have listed in the UK. So I, for one, I sort of welcome Hill's review, and I think anything that he can do to sort of help make it easier for businesses to take that first step and make the US less attractive in comparison is absolutely something that I would support.
Yeah, I mean, I would add, I mean, I think they are certainly things that the exchange can do, but it's also the entire ecosystem around it that needs to evolve and have a lot more enthusiasm for tech. And as you said, Brent, I mean, I think, you know, we need to have a lot more research analysts to truly understand the business. When I went public, now it was a long time ago, but I went on NASDAQ because there was nobody in Europe that was interested in tech. And later on, we did a secondary listing in Europe. And I would say today there's a little bit more, but it's still too embryonic. I mean, we need to have research analysts that understand each of the sectors. We can't have, like, you know, in the US, you would have research analysts who understand a particular segment of cybersecurity. Here, you would have a tech analyst that covers, you know, everything from maybe Siemens to ARM to whatever. And so we need to have that granularity. We need to have that understanding. So the banks need to do their part. The investors need to be a lot more interested into it. And I think we'll start creating that virtuous circle, that flywheel, and hopefully we'll get there. The good news is that we're starting to have more and more candidates of great companies that now can think, well, which exchange am I going to go to? Am I going to go to the US like a lot of the others, or can I do it here? I think we need to create a situation where, because it's kind of tempting to go to the US. So you need to create a situation where there is actually a lot of advantages to be here as opposed to there, to create an unfair advantage for European companies to stay in Europe, not just catch up.
Indeed, thank you, Bernard. And I think that that's something that is particularly pertinent at the moment. And hopefully the groundswell that is going on at the moment, that perhaps was catalyzed in some way by the Hut Group, is something that we can continue to build on. Obviously, as we go through Brexit, it's going to become ever more important for Britain to be able to be as competitive on the world stage with respect to attracting and growing capital. Can we go to the next question? We have a question from Julian Macedo.
Hi, thanks, Murray. Hi, Matt. I'm Julian Macedo. I run the deal team. We support companies doing big deals like an IPO with experienced project management to help them execute the transaction. Now, Poppy said that maintaining business growth is ultimately extremely core to her job as the CEO. And growth is, of course, vital for the success of any tech-focused business, but an IPO is a huge project and it's going to be a major distraction, which is going to put a speed bump on that growth. How did your IPO affect your team's focus, and what would you advise Poppy to watch for?
Good points. I mean, you're absolutely right. Profit warnings normally follow, don't they? So look, we're fortunate, super fortunate, that we have a very sizable corporate team that's full of legal and corporate finance experience, and a huge amount of the burden was taken up by that team. And we've invested very heavily in finance as well, so we've got a lot of senior finance people around. So they did a lot of the work for everybody. But then where the real requirement is on the senior team is presentations, and especially on the CEO. So you're doing a lot of presentations. Now, the way we tackled that was we did a dramatically reduced level of marketing that anyone else does. And so we fixed the price of the IPO, which then meant that everyone knew that that was not going to change. That was the deal. And then we picked a small number of investors, having spoken with the banks, that we would do presentations to. And from there, we then built out what our share register was going to look like. So we ended up having to do a far less amount of work and distraction for the senior team, supported by this big corp dev team. But what it meant was we had the IPO done and dusted in the main, and then actually we only did maybe 3 or 4 days of marketing. And I would say that Zoom and Teams is an absolute godsend in doing an IPO. I didn't meet anybody. I did it all from a laptop, so you don't have to go from continent to continent trying to drum up support and the likes. So I think I was fortunate in that the timing of being able to do this digitally has really helped. The way we did our IPO was fortunate in that we did a very small amount of marketing and a really targeted approach, and we have a big corp dev team that does a lot of the work. And then equally, the final point is understating your numbers. Yeah, and I don't mean that from a reckless perspective, but the temptation as you go through an IPO process, as you go through the momentum, is to overstate your numbers in terms of really putting a stretch out there for yourself. So you've got to keep something in reserve, is what I mean by the understatement, which is you might well think you can deliver X or Y, but cut it right back from there and go and deliver it first. So even in all of that process where we were fortunate with the scenario, what we've tried to make sure is that whatever we do going forwards, we're not massively up against it, because it's all about expectations from here and beating those expectations, time and time again. So time will tell whether we've done the right things there, whether we've made the right estimates, etc. But that's our primary focus now, and trying to make sure that we haven't overstated ourselves, because that would be a very stressful place to be.
I think we have time for one last question, and I see one coming from Alex de Pledge.
I wondered, because I get very lonely sitting at the top of a company, and it's nowhere near as big as the companies that you guys have built. So I'd be really curious to know what sort of support structures you put in place, and how do you sanity check your ideas and your vision, and basically stay sane, to anyone who wants to answer.
Alex, let me take that one. Can I ask you, how many people have you got in your organization?
Now, 100. I let a few go.
That's quite interesting. I think that's the point. It was a real sort of tipping point for me personally, because below 100, you sort of really feel like you know who everyone is, and you know all their names, you know what they do. And then after that 100 point, you start to not necessarily know who everyone is. And then it becomes quite isolating, because everyone knows who you are, and you're thinking, goodness me, who is that person in the kitchen? I'm not sure I even know which department they are anymore. So I get that. And that for me is where that sort of real distance from your business starts to get feeling. And then it becomes accepted, and you're not expected. Once you're more than 1,000 employees, you're not expected to necessarily know everyone's by name. And then it feels much more comfortable. You feel like it's known and it's understood, and it's much of an easier transition for me. But I share your discomfort. I can remember the 100 employee point, feeling a little bit cautious about that. But the way that I check and balance now is that I've just got probably the best team of people around me that have ever existed in the entire world, although I am incredibly biased. And they're people that I know and I trust, and will point it out to me when I'm being an idiot. And I trust them to tell me if I'm making a moronic decision. And I might still overrule them and decide to go with it anyway, but I trust that they will always come back to me and say, I disagree with you, I think you might have got this wrong. And that doesn't mean sort of running it as a democracy, but you trust that they will always feed back in. And the way that you create that is by being the same the way you deal with your team. You always give them that sort of honest and true feedback. But then there comes another challenge further on, which is as you scale, if you're not careful, the only people that you talk to are the people that are in your team, your executive team that you have around you. And then you need to start thinking, okay, well, how do I make sure I'm having the conversations that you might be having in a canteen with some random office members that are telling you what they're up to? How do you recreate that sort of atmosphere and talk to the people that are actually out there doing the job? And that was another important transition as well for me, when making sure that I'm joining random team calls, like I join the business development team call and just drop in and say, hello, how's it going? And just hear from the people on the ground what they're up to. And then it's a really good position, because when they point out something that's not working in the way that they'd like, you can go and then bash their sort of team manager over the head, and you don't sort of necessarily have to be the one to resolve it once you're CEO at that site. But that's the important point for me, is that once you get past that 100 employee point, making sure you've got a really, really good management team around you. And then the next phase is making sure that you're plumbed back in within the business, the people who are actually doing the job, and you've got the opportunity to hear from them about what it is that they're up to and what they're doing. But best of luck with you and your business. It's an exciting time.
I mean, look, from my side on that, echo quite a bit of what Poppy said there. I was smiling just thinking of some of your experiences there. I work, we don't have any offices in our building, so none of us sit in these rooms away from anybody. We all sit in an open plan arena, and you'd be surprised what that brings in terms of the ability to bounce situations off people. But somebody once gave me, or said some very wise words to me that have whether they've haunted me or stuck with me some way. But it is worth remembering that he said to me, nobody can ever walk in your shoes. And whatever he mean, you know, what I decided he meant by that is, it's on you, right? So yes, you go and bounce things off, but it was me accepting it is going to be lonely. You know, there are some big decisions to make all the time. You've no idea whether you're making the right ones, nor has the person that you speak to. But you'll share, you'll chat, whatever. But ultimately, it's only you can make those calls. And then you've got to, you just got to deep breaths and do it. And obviously having people around you that could talk, but nobody's got the same level of detail of knowledge there. They can input, etc. But ultimately, you know, it's down to you, and that's why it never stops to be lonely. I don't find it anything anything but lonely in that regard. But I have plenty of people around me I can chat to. But when I walk away from them, I know it's my call, and that hurts sometimes.
Nothing to add on my end. I used to run a large company. I don't anymore. I run a tiny business. So I don't have that pressure. I mean, Poppy and Matt and all the other CEOs out there, they're the real heroes and carrying that responsibility.
That's the first time I've been called a hero. Makes a change this week anyway. I'll take that.
Wow. Yeah.
Well, to our panelists and to our audience, we're almost out of time. What I'd love to do, perhaps, is just finally just switch to our three panelists. Thank you very much for your contributions today and for your insights. But perhaps just in leaving, if you wouldn't mind just giving us one key takeaway or any final thoughts to this group. Perhaps Poppy, if we started with you.
Yes, let me go first. Running a business that is fast growth and based on innovation is an incredible privilege. I love it, and sometimes it's terrifying, but it's also hugely, hugely rewarding. And I would love to see more of these success stories here within the UK. And if there's anything that all of us and the panel leave behind, and the participants here, is that we go on and leave behind in our trail a whole bunch of successful businesses that have the get called heroes in the way that Matt just did. Then, you know, I think that would be a big success to all of us.
On my end, I'm incredibly optimistic about what's happening in Europe right now. I think the momentum has picked up superbly. We're starting to see big businesses being created, like The Hut, like Darktrace, and many others. I would encourage everybody who listens to really get into that space, the ecosystem of technology. Start companies, invest in technologies, make people be around you be interested in it, because that's really what is transforming the world, and it's transforming it for the right reason, in a good way. And so I think the future is going to be fantastic, and Europe is going to be back on the stage versus our friends in America and in China.
And look, my roundup on that would be, I think one difference that quite often you see US versus many other markets, UK, Europe included, the one ingredient I think those guys have better than ourselves is just good old positivity. And you'd be surprising how far that carries you. I think if we could all, of all the things we want to take away from a debate around US, Asia, Europe, and UK, I think if there was an attempt to try and think a bit more positively first, then I do think that's a pretty decent start point, and you'd be surprised on what a different direction that might take you on. And so that's something I try and, I look at them and think, well, there's a lot of celebration goes on over there. We all sometimes have a giggle about it, how happy and celebratory it can be in America, but it's a great, it's quite infectious, and you'd be surprised what success comes out of that. And for me, one thing I'm trying to take away is a bit more positivity and put that to the forefront.
Thank you. The UK and Europe have a number of phenomenal companies and phenomenal entrepreneurs and founders. The London Stock Exchange, we certainly are thrilled to be able to partner with people like Matt, who have listed their company on our market, and we stand ready to help anyone else who might be looking at their options in that space. And with that, thank you very much to our panelists. Thank you very much to all of you for joining this evening. It's been a fantastic panel, and I wish you a very good evening. Thank you.
Thanks, everybody.
Thank
Cheers.
you very much.
Thanks.